I'm here with Shaun Rein in Shanghai. Actually pretty few outside, and I'm glad that you made it and allowed me to come here really on a short notice. I think that's really China's speed. That's what I love about this country, get things done. I posted or messaged you earlier this morning that I would like to reach out to you, and you said, of course, come to my office.
Very nice to meet you, Marcel. This is the second time you've reached out to me.
Yeah, exactly.
So I'm glad we finally were able to do this. And I've been traveling a lot lately. So today was actually perfect timing for you to message me and say, Shaun, let's sit down and have a talk about the economy. Let's talk about the geopolitics, whatever Marcel, you're interested in your audience. So I'm very honored to be here today.
Exactly. I'm following Shaun since quite some time because I really value his honest takes. They're mostly not politically correct. They're very direct. He's saying really what he sees on the ground. In my point of view, that's my perception. But I think you viewers can make up your own mind today about what he's got to say about the various topics that we're going to dive into. And I think it's going to be a fun one. It's going to be valuable for everybody. And so I would hope that you guys go and follow him on X, on Twitter, on LinkedIn, where he's super active, and maybe in the future also on YouTube. We'll see about that.
Potentially. So I hope you enjoy my remarks today. You might not agree with them, but at the minimum, you'll know I'll say exactly what I'm thinking.
Exactly.
And whatever I say, I'll back it up with data. I find that I can be polarizing sometimes, but for investors especially, if you've listened to my advice and you've listened to my fact-based advice over the last 20 years, you'd be really rich right now.
Yeah, we can talk later a little bit about your discourse with the media. I think also that's an interesting take, but maybe start off with investing and the state of the economy and stock markets, because I have to be honest, I didn't like your takes in the beginning where you said, the consumer is not in a good state in China, because I'm obviously bullish on China and maybe I just wanted to ignore the reality. But you've been calling early on that, things have changed a little bit. So maybe take us through your thinking of how you experienced China after the opening of the pandemic and then where we are right now.
Sure. Well, Marcel, and for those of you who don't know my background, I'm actually American. I've been in China for most of the last 27 years. So I came here in 1997 to study Mandarin at Nankai University in Tianjin, China. And, frankly, when I was there then, the New York Times and the Wall Street Journal all said that China's economy was weak and it was never going to grow. You got to remember, we were still dealing with the legacy of the 1989 Tiananmen incident. You saw a lot of the sanctions. But when I arrived, Marcel, and I started talking to Chinese people, it was clear that there was an electricity in the country. People were optimistic. They felt that the lives of their children would be better than their own lives. And so I became one of China's biggest bulls. Mm-hmm. And for the next 20, 25 years, I was right. China just boomed. I started to become bearish, however, during the Shanghai lockdown 2 years ago, really in February, March of 2022. I felt that people in the Western world didn't realize how bad the lockdowns were in terms of hitting the consumer confidence. And there was going to be a lot of unintended consequences. So let me be really clear. Mm-hmm. In 2020 and 2021, China's government did a great job with their zero COVID policies. They saved lives. But in 2022, starting with the Shanghai lockdown, I got locked down for almost 3 months. The first 2-3 weeks, I couldn't buy food. Just couldn't buy food. So imagine Shanghai, which is China's most modern, most international city. We had food security problems. That made Chinese consumers really nervous. And so after the post-COVID era, starting last year, I became one of the biggest bears. Mm. Not because I'm anti-government. I think the government's done a great job. Mm-hmm. It's more that there's unintended consequences of the lockdown. Consumers were scared. So they've started trading down. So think Luckin Coffee rather than Starbucks. They would buy a car from NIO rather than Porsche. They would buy a BYD rather than Volkswagen. Yep. The name of the game for the last 2 years, Marcel, has been trading down. Mm. And you can still see it with the numbers that just came out with the May 1st holidays the last couple of days. Mm-hmm. The number percent of people traveling and going up was about 12, 13% more than 2019, but the average spending was down about 10% still. So consumers are still on a per capita basis spending less than they did in 2019 because of the anxiety from the bad economy from zero COVID and geopolitical reasons.
Right. And I remember you also were not buying into this narrative that there will be big government stimulus. And in fact, we have never seen it, right? We now see a little bit of a recovery in terms of the GDP numbers are where they want it to be. However, still not any stimulation of the consumer or the old model, investing in real estate or infrastructure. Maybe with the third plenum, or do you write it off completely?
So a lot of Wall Street especially, they really wanted a bazooka-like stimulus, right?
Yeah.
That's what's happened in the United States. But here's problems with that. In the US, you've seen debt has grown, almost doubled in the last 5 years. That's why you're seeing inflationary problems. In China, we didn't have a major stimulus. We didn't have it during zero COVID when, at one point, 300 million Chinese were locked down and unable to work. Thus, they didn't get wages because a lot of Chinese don't get fixed salaries. If they work a night at a restaurant, then they make money. If they give a massage, then they make money. So the time, in my mind, that you would have had a stimulus would have been during zero COVID, not afterwards. Now, I've always argued that China doesn't need one and shouldn't launch one. And here are some of the reasons why. First, the economy is weak, just like I mentioned, but it's not that bad. Okay, I still think we're going to see 5% growth rate in 2024. To give context, Marcel, China's growing this year the entire size of Thailand and Vietnam's economy. It's still pretty good. So it's weak, but it's not that weak. Second, and here are some of the bigger issues, China's government has run out of money. It's run out of money for two reasons. One, during zero COVID, we had to take COVID tests sometimes 3 times a day, and they were all free. So a lot of local governments had to spend a lot of money in 2022 on zero COVID, which depleted their savings. Second, even more importantly, the economy has been really bad for 4 years. So there hasn't been a lot of tax revenue raised. So there just isn't money that's available for the local governments or the central government to launch a major stimulus without becoming what I would say irresponsible the way the US Fed is. I think America is going to have a major debt crisis, is going to have a major currency crisis in the next 10, 15 years because they've been printing money. China's being smart. The other thing, Marcel, and maybe I shouldn't say this, but I think China's waiting for a stimulus in case there's a war between the US and China. And so they're trying to keep their monetary bazooka-like stimulus in case there's an actual need to use a real bazooka. And then they're going to have to jumpstart the economy that way because I love America. I'm American. I'm a red-blooded patriot, but I also love China. But I'm fearful that there's going to be a US-China warm, not just a warm conflict, but a hot conflict because of warmongers in the United States, like a Tom Cotton, like a Mike Gallagher, like a Marshall Blackburn.
Yeah, it's definitely noticeable even under the Biden administration, which people may have thought
It's
might
called
be...
the Biden regime, please.
Yeah, it's funny, like if you ask some of the Chinese, I think they would love a return of Trump, even love in terms of, there's no good no good alternative right now. But
I think most Chinese prefer Trump over Biden, actually,
Yeah,
because
yeah.
Trump is viewed as starting the trade war and starting the economic vice, but it was more out of pure politics.
Yep.
It was like, let's make a business deal.
Yeah.
And things could be resolved. While with the Biden regime, and I use the term regime, and I think it's appropriate, is more ideological.
Yep.
Right? It's more about how do we contain not just a rival, but a communist country.
Yeah.
And that's why I'm concerned that we're going to have 10, 20 years of tension, which it's not just me. If you go, Marcel, and you ask the person on the street what they think, they're worried that we're going into a 20-year Cold War.
Yep.
The typical Chinese has seen what America has done to Iran, what America has done to Venezuela, what America has done to Cuba. And they're worried that America is going to impoverish Chinese for the next 20 years. That's why so many of them are saving for a rainy day. They're worried that their jobs might be lost if they work in an American company. They're worried that their company is not going to be able to sell their products and services to America if they're working for a Chinese great firm like a Huawei or like a Hikvision that has had tariffs slapped on them. Exactly. So the overall consumer sentiment in China is very weak right now because of the geopolitical tension between the US and China.
So couldn't you say the Biden administration or regime is winning in this regard because they're exactly achieving what they want to do? Or do you think there are any flaws in this strategy by America to contain China? Do you think it will work out in the long run?
So no one wins. Right? In economic warfare or in hot war, no one wins except for people who are selfish, except for people who want to make money or gain power themselves in the short term, or companies that benefit in the short term off of war. You know, the Lockheed Martins, the Raytheons of the world. Now, let's be honest. The economic tension between China and the US has hurt China more than it's hurt the United States, for sure. I mean, America's economy is still quite strong right now. You see the stock market is booming. So there definitely has been a greater impact on China. So in that way, you could say America is winning. But if you want to actually think about it from a macro level and you want to be long-term thinking, Biden is shooting America in the foot, right? They have stopped the ability of the Qualcomms, the Intels, the NVIDIAs to sell to their largest market. It's very short-sighted for the Biden regime and the CHIPS Act and all of that to think that they'll be able to stop China from being innovative, right? So what you're starting to see is incredible innovation is coming out of China in certain sectors like NEVs, solar, and you see with the release of the Mate 60 from Huawei that they're now able to create a mobile phone that's on par with Apple with pure 100% non-American technology. That's why you've seen Apple's iPhone sales dropped about 8% in the first quarter of this year, and their stock is having some issues. That's why you see Tesla is in big trouble in China, because you have Chinese companies like NIO, like Lixiang, you know, Xiaopeng are all moving up the value chain. So short term, yes, let's be clear. Biden is putting huge damage on the Chinese economy. But in the long term, he's just creating, you know, great indigenous innovation and accelerating what China's government already wants of self-reliance and technology supply chains. And you're going to see Chinese companies are going to become global players. You know, in the last few months, I was in Saudi Arabia. When you go there, you see Alibaba, you see Huawei, you see Chinese companies all over the place. What Biden misses, and a lot of my fellow Americans miss, is how, I don't want to say the word revered, but how many countries in the global south are preferring to get closer to China's orbit politically than America's, especially after what's happened with Gaza, especially what's happened after Ukraine. A lot of countries are saying, you know what, let's get closer to China. Biden is hurting China, but is in the long term going to hurt American prestige, American economy, seriously.
Against this context, let's talk a bit about the stock markets. So both the US market you mentioned, Apple and Tesla, we'll get to that in a bit. But first, maybe here on the China side, because we're currently in a little rally when it comes to the Hang Seng stock index and maybe, you know, the indices in general that are covering Chinese stocks up 30% currently. But we've seen such rallies in the past months and years, right? So the question is, like, what's fueling the current rally in your point of view? Is it about a fundamental recovery in some of the Chinese economic data? Is it about the Blinken meeting and we see now Xi Jinping going to Europe or anything else? And whether or not you think that this time it could be sustained, or will the shorts just come back in and short down this rally again?
Yeah, I don't think there's a fundamental recovery in the economy. It's still mixed. It's weak, but not that weak. But we're definitely not in that hockey stick shape where we're going to see a booming market. I think you see a rally for a number of reasons. One, the valuations were just too low. Okay. It was out of touch with reality. So 50% of my business is working with mutual funds and hedge funds on their investment strategies. And for a long time, all of our clients, you know, the biggest funds in the world were saying, let's go to India, let's go to Japan. They were all fleeing the Chinese equity markets, but they fled too far. And so I think there was a realization by a lot of the big institutional investors that the valuations were too low in China. It was time to get some more exposure. That's number one. Number two, I think China, with the new head of the CSRC, the Securities Exchange, has started to rebuild some of the confidence from the domestic investor market. And so they're coming back into the market. But again, I think it's probably a short-term rally. So what you see typically in China, whenever there's a down spot, the government helps engineer confidence, and the smart money comes in for 2 to 4 weeks. And they put money in, they make money, and then the markets drop again. So I think we're now at the stage of 2 to 3 weeks in where the smart money is going to make money, and then they're going to sell money out quickly. I would be short-term very cautious for a retail investor. Frankly, you even have to be cautious if you're a institutional investor in the short term. Medium, long term, I'm still cautiously optimistic, fairly bullish on the equity markets in China. I think the government wants to support it. They want to create more transparency. The real estate market is dead, right? Prices are down 10, 20%, 30% in some locations. I think you're going to see some of the savings rates are going to, instead of being saved for real estate, people are going to start putting money into the equity markets. So over the medium to long term, China is still a good place to invest. But right now people are nervous, Marcel, and that's why they're buying a lot of gold. Gold sales are soaring in China because people are scared. Chinese are putting their money into time deposits. They're putting money into insurance products. So we've got a short-term rush because nobody wants to be left out of the momentum. They see all the smart money going in, they want to go in, but be very cautious right now. I mean, it hurts my business, frankly, to say this. Right? I mean, but I got to be honest. I have to tell my clients, be cautious. It's hurt my business for 4 years, but I've told my clients the truth. You got to be cautious of China right now. And I was right.
That's exactly why I bring you onto the channel, because, you speak usually just what you see, and in nobody's favor, really, what you can say honestly. And I've followed and observed it over time, and I can say what you just mentioned. You've been pretty right in some of these calls recently. But
thank you. I try to be as balanced as possible. I think it's important. Anyone should be balanced. You say the good and the bad, but especially as a consultant, if I start lying and saying buy, what client's going to work with me? And some of my clients been working with me for almost 20 years now. Yeah,
and you get the heat probably from both sides. We can talk a bit later about the media takes and how difficult it is to have an honest opinion. That's currently maybe just possible here on such channels like YouTube or X with independent researchers. So that's why we're doing that. But now back to the markets. So couldn't there be also a fundamental shift? I'm just asking you this about, China has been very open about saying, the real estate sector, we cannot pump money into it anymore. That's the old growth model. We've got now the new productive forces, green technology and new fields. They don't want the old stimulus. And you mentioned how some investors may now put money into the China space. And I'm wondering, why doesn't the government also see it on a long-term basis to, have some diversification out of real estate also, for example, like pension funds, insurances for employees and things like that. I see some signs here and there, but maybe you've got
They're
more
trying,
insight.
but it's very difficult. I think, on the pension fund side, they want to be very cautious. And so this is their broad base of support, right? They're not going to do something like Norway. They're not going to do something like Saudi Arabia and take the pension and gun it up to look for really good investment returns right now. I think they're very cautious, and they'll slowly drip it out. I was actually in Beijing a couple weeks ago with one of my hedge fund clients that was raising money from CIC. So they have some allocated, but I think actually a lot of it's going out of the country. And that's actually a good way for investors to make money in China right now, is not buying Chinese stocks, not buying Chinese equities, but buying the stock of multinationals that do well or don't do well in China. And that's what my firm has been doing a lot lately with hedge fund investors. So they've been hiring us to analyze the sports apparel sector, the luxury sector, because you have some companies that generate 20 to 40% of their revenue in China, but they're listed in France, they're listed in the United States. But I do think, getting back to your question, in the medium to long term, China wants to support a vibrant equity market. I actually am the second largest shareholder of an A-share hedge fund in China. I don't go to it day to day. I'm just a silent partner. But I'm betting that the markets will do well long term. But it's about confidence, right? I think the Chinese typical investor is hurting right now. And they've seen, we've had 5 bad years of equity returns. They don't want to put the little savings that they have into equity because it could disappear. So that's why they're sticking it into gold, or they're sticking it into time deposits, because they can at least hold on to it. And then when you go to the wealthier consumers, when you look at consumer confidence in China today, it's the wealthiest consumers who are probably the most pessimistic. After the crackdowns on Jack Ma and the tech sector, after the crackdowns on New Oriental and the education sector, the crackdowns, which I agree with actually, and I have a book called The Split coming out later this year that has chapters on both of those crackdowns. But I think the way the crackdowns were done cut too far to the bone and scared too many investors. So a lot of wealthy people are saying, I don't want to invest. It's the regulatory setup is not safe. It's not stable. So people are taking a wait and see approach. I think the way I'd word it, Marcel, is that animal spirits are gone among the wealthy Chinese. So the guys who over the last 30 years, would take a risk, would start a company, take out a bank loan or go to the underground bank market and take a 50% interest loan and build a building, start a company, reform a factory. Those guys are all shell-shocked from the crackdowns and the weak economy of the last 5 years. So they're staying out. They're keeping their money out of the market, or they're trying to get their money offshore, legally and illegally, however much they can.
What could be a sign that Beijing could send to those entrepreneurs to gain back confidence, to be able to stick out the head? And
it's going to be hard, frankly. I think, you've seen Li Qiang, the prime minister, and Xi Jinping. If I were advising them, I would say that they need to do a charm offensive, not just to other governments, but to the business community. So I was very happy that Xi Jinping recently met with American business leaders, that he met with business leaders in San Francisco last year. I think at the end of the day, it's not about the Minister of Commerce, right? It's not about the Prime Minister Li Qiang. I think Xi Jinping himself needs to be the one who goes out, and instead of just meeting with the president of some random little country, he needs to meet with the CEOs of the largest companies and demonstrate to them that China's open for business again, that despite the political tension, China is open towards FDI. And it is, right? So I've been on the ground here for over 20 years. I would say China is more open to FDI now than any time that I've seen since the 2008 Beijing Olympics.
Wow.
So you see that they're launching, visa-free for 12 European nations. They're giving subsidies and free land to a lot of companies if they invest into new technologies. They want FDI. But there's a perception problem that in the Western world that China is closed for business, that Xi Jinping is anti-capitalist, anti-business. So if it were me, I would say Xi Jinping, when he's in France this week, he should meet with the founder of LVMH. He should meet with the heads of the industry titans in France, in Serbia, in Hungary this week, and then also welcome the Germans. We need the Germans more than anywhere else in Europe. So he needs to, get the Volkswagens, get the BMWs, get those guys coming back into China in a major way. It's got to be Xi himself.
Right. And how about the prospects of foreign capital coming back when the Fed starts cutting rates? Do you think that's a big factor for emerging markets, the US dollar strength and all of that?
Yeah, I do think it's an issue. And I'll break it down from an FDI into China right now. We see very little coming in from America, right? I'm American. Most of my client base has been American over the last 20 years. I'm not talking to Americans. I'm talking to a lot of Europeans.
Interesting.
So it's clear that the Europeans are trying to come up with an independent economic system and maybe an independent political system to the Americans. And they might be worried that Trump is going to become president next. And it might behoove Schultz, it might behoove Macron to get closer to China. Now, when it comes to the currencies, look, the US dollar is too strong. The Japanese yen is too weak. We've got a problem with, the Thai baht. We've got all kinds of issues with emerging markets.
Yep.
So everybody's rushing to safe havens.
Yep.
That's the US dollar right now. I think the renminbi is going to be weak for a while, but long term, it's going to be strong. I wish they would make it convertible.
That's not going to happen.
It's not. I mean, they've been saying maybe for 20 years, but they haven't done it. They should make it more convertible if they want to be a true reserve currency. And the reality is, the global South wants to de-dollarize.
Yep.
After what they've seen, right? When you see the United States weaponizing SWIFT, when you see the United States, taking without trial the money from the Russian oligarchs, that has made all the Chinese, that's made all the Saudi Arabians, everybody from the Middle East nervous. They say, well, what if the United States points a finger at us and says human rights abuses and just confiscates our assets without trial? So there's a very good opportunity right now in the medium to long term for China to create a reserve currency and a strong banking system. I wish they were doing that. That's what they should be doing. That's a great opportunity. I don't think they're doing enough of that. Again, they need to make the currency convertible. Second, China's been, with the Common Prosperity Drive, they've been lowering the salaries of bankers. Which I actually agree with, but I also disagree with, because it means a lot of top talent aren't going to go into the financial service system. So in the longer term, it's an issue if you really want to push de-dollarization and have RMB, wealth management, investing, if you don't have the China's top talent going into that sector because they can't make enough money.
You mentioned safe havens, like also the strategy of investing in, for example, large caps in the US that are making huge portions of their revenues and profits here in China. I'm challenging you here. Isn't that a strategy that has possibly worked in, after the reopening, but now is becoming very dangerous? You mentioned Apple losing market share to Huawei, Tesla losing market share and under pressure from the Chinese EV. So would it still make sense to go along these mega caps just because everybody's going to those magnificent seven?
Well, I mean, I've been on record for quite a while saying I'm very negative on Apple's prospects and Tesla's prospects of China, right? Tesla specifically has had problems because they haven't really created new models in years. Everything looks the same. And then in order to grab market share, they've been discounting. That's the only way they've been trying to ginny up sales. So the problem with that is when Tesla first came into China, they were a luxury brand. People would say, instead of a Porsche, instead of a BMW, I'm going to buy a Tesla. Now, the cars are so cheap, it's like they're almost competing with a Volkswagen. So they're losing out on the luxury aspiration type purchase. But I think the bigger problem for Tesla is that you have local players that are as good, if not better than Tesla. And you can't, if there's something that I've learned in all my decades in China, is as a Western brand, you can't compete with Chinese brands on price. They'll always be able to undercut you because the Chinese CEOs and their executives are staying in China. They're not flying all over the world. They don't have the expat packages. Like one of Volkswagen's problems, I think, is they have too many expats. And so the expat packages for some of these guys with all their families, sending them to schools, some of them are living in 5-star luxury hotels, is incredible. The cost structure, you don't have that with the Chinese NEVs. Same thing with Apple, right? I have a Xiaomi phone. It's half the price of an Apple phone. I think it might not be as good, but it's certainly almost as good. And I think in today's economic environment, a lot of Chinese are going to trade down. So you're right that investors should probably short or be cautious on Tesla and Apple because of China. But there are some brands that are booming here. You can look at like Hoka, which is part of Decker's UGG. It's a sports apparel company. They're doing very well. You can look at the luxury players like Chanel. They're absolutely booming, because of China, and they're raising their prices 30, 40%. So you need to be smart as an investor and look. Certain brands that dominated China for years, like a Starbucks, like an Apple, like a Tesla, are in trouble now.
Yeah.
But there's other ones that are emerging that are really quite strong. Hoka is doing very well. You should also be looking at Uniqlo from Japan. They're booming right now because their quality is great. Other companies from like Spain, Zara. Zara is another company that you might want to be looking at right now.
Yeah, it's crazy that they can compete in this local market, right? You wouldn't expect that necessarily, but yeah.
They're a well-run company,
Yeah.
and they have good advisors.
Yeah. What would you advise for if Elon Musk becomes your client and we saw him coming to Beijing talking about FSD, because that's one aspect. Yesterday I just wrote a NIO, which has just gotten software update for NOP Plus, so inner city self-driving, and that's where the Chinese players are frankly ahead. So a Tesla here in China cannot do this functionality today. They have it in the US, possibly as a beta version. But Elon Musk, he's scrambling to go here. He's got his good contacts with Li Qiang and so on. But what would you advise him to do in order to save his business with Chinese consumers? Is there a future for an Apple and a Tesla in China?
Yeah, I think Apple and Tesla both can bounce back. Okay. I think it's great that Musk met with Li Qiang, the prime minister. He should have met with me. Probably would have gotten more out of the visit if he had met with me.
There you go.
I mean, Li can give
his
the regulatory, I'm obviously quite arrogant or confident, as I prefer to say. But I think, frankly, it's great that he has the self-driving. But like you said, the Chinese players have that too.
Yeah.
And I'm not sure that Chinese are willing to pay for that right now, especially because in China, the driving is so much more dangerous than in Western nations, where you go on a highway and can just cruise for 100 miles. Because here it's stop and go, stop and go, stop and go. So I'm not sure how many Chinese will actually use that functionality and will actually pay for it. If I were Musk, I would be launching new models, or if he was to keep the models he has now, at least make them look different. Like I can't tell the difference between the Model S and the X and the high end, and they haven't really changed. So it's about creating something new designs, new looks, new price points, not necessarily going cheap. Right? I mean, NIO is about to launch an even cheaper line.
Yep.
Xiaopeng is already cheap. BYD is a marvelous company. So again, don't go cheap. Create that more premium image again. That's why Apple, in many ways, is better off than Tesla. Because Apple still has that premium image.
Yep.
They're just getting hit hard right now because they're too expensive. But if people had money again, they might buy Apple. The second problem with Apple is they've lost the high-end market because they don't have the foldable phones.
Okay.
And so the wealthy Chinese like foldable phones. And then Apple, again, the same problem that Tesla has. All their models look the same. I can't tell the difference between a 14 and a 13 and a 12. They are all very similar right now. So you have to get more of the design element back into play.
Right. So localization, by the way, that's also some of the services we are offering from our firm to clients. But that's maybe a little bit off topic. Maybe jump to.
No, but they should hire you to do localization, right? Because or me,
Yeah.
or both of us. But
Yeah.
I think the key is you can't just bring what worked in Germany and bring it into China.
Yeah.
And you need to localize. Now, localization doesn't mean sticking a dragon on the side of your car or I love China. I've seen too many foreign brands do that. They're like, the year of the dragon, so they have dragon t-shirts, dragon. That's not what localization means. It means hiring designers who understand what the Chinese consumer wants. It's about launching marketing and sales campaigns that fit what Chinese consumers want. It's not just sticking a dragon on the side of a car.
Because ultimately it's still a huge market here. And I think what you said before is right, that the Chinese consumer is not dead, but it's just spending somewhere else, right? I see a little bit of a shift to more towards sustainability, upgrading life and quality goods. And by the way, with NIO and so on, it's not longer a copycat game, right? They are here innovating on their own, bringing out the new stuff that Chinese consumers actually want. And I think that's also what we hopefully coming out of this difficult time right now, we'll see that new player will establish themselves with catering those new Chinese needs here on the ground. I think some of these emerging trends we're possibly just right now starting to see. If there's anything you are seeing emerging as a trend for consumers.
Well, I think it's clear that China's economy is weaker than most people expected it would be out of post-COVID. Unfortunately, I was right.
Yeah.
And as I've said, I've been pretty upfront today that investors need to be cautious about investing in domestic Chinese companies and in the Hong Kong Stock Exchange, especially retail investors.
Yeah.
But long term, China is the next China. You're not going to be able to find the scale that the growth of the middle class in any other country. I expect that China's middle class is going to grow from 400 million to 800 million over the next 10 years.
Yep.
So if you're a multinational corporation, if you're a German firm like Volkswagen, you must win China. You have to be investing. That's why you saw BMW announce a multi-billion-dollar investment into the country. A lot of people say to me, Vietnam or Saudi Arabia, great countries. Look, I just went to Saudi Arabia. Absolutely loved it. They only have 30 million people there. So you're not all going to be able to sell a lot of Air Jordans or a lot of mobile phones into Saudi Arabia. It's going to be China.
Yeah.
Vietnam, similar thing, very small market. India is a great market, but still the average GDP per capita is only 1/6 that of China's. So we're talking India is going to take 20 years, 30 years to catch up to the China market, if that. Now, am I fairly bullish on India? Yes, I'm not an expert on India. I've never been there, but you see a lot of money is going there. The reality, though, is the returns in India don't always sound good to me. Some of my clients say we're investing, but they haven't made the profits that they expected. That's why, again, let me underscore it. China is the next China. This is the growth market for most multinational firms over the next 5-10 years. Maybe not the next 6 months, but definitely over the next decade.
So is there no truth to the narrative that China's the next Japan and we have deflation and maybe a whole lost decade in your views?
I think that there's some similarities between Japan and China, especially on the real estate side. I think on the real estate sector, you might face a lost decade. But I think there's some big differences between China and Japan. I think first off, in my mind, the Plaza Accords and what President Reagan did to Japan is what hurt their economy for 30 years. So the Japanese basically capitulated to the Americans, destroyed Toshiba, destroyed their innovation in semiconductors and tech sector. They also, hurt their the yen, and so they weren't able to be an export country. I don't think China is going to do that. So China is a lot stronger politically than Japan was. They don't have 50,000 American GIs based in China the way Japan did in the 1980s with American GIs. I also think China is pushing indigenous innovation more. They're not going to allow America to destroy the tech sector.
Yep.
So you're seeing a lot of investment into semiconductors, into green energy innovation, just innovation throughout the entire country. So are you going to face weakness? Yes. Are you going to have a lost decade like Japan? Absolutely not. It's too big a market.
So let's finish this interview, and I've taken lots of your valuable time already, and I hope you like it. So please smash a like and make sure to subscribe to the channel and follow Shaun on his various social media accounts. I want to get back to your business, which is advising clients about China, about the financial markets. So you're talking with US hedge funds, that's one side, and you're also a media person taking lots of interviews. And I just want to get your personal experience about the last couple of years and months of how this relation has possibly changed. I mentioned before, you're very frank, straight, direct speaking. That has created some trouble, maybe also in the media world. And also, I want to know whether or not the investors are actually reaching out to you. Are they curious about what's going on in China? Or are they, look, I don't want to get involved in this at all. It's too hard for me.
Yeah, no. So last year, I was brought by an investment bank to the United States twice to meet with investors in San Francisco, Boston, and New York. I keynoted Citi's conference in Sydney last October, and they've actually hired me again. So I'll be in Sydney in October of 2024. I spoke for Citigroup in Macau and in Singapore. So investors still want to talk to me. And it's interesting you bring up the idea of media. They often want to talk to me because they trust me more than media.
Okay.
I gave a keynote to one of the biggest mutual funds in the world. And they said, we engaged you because we want the real dirt on China. We don't trust what we see in Bloomberg. We don't trust what we see in the Wall Street Journal. Frankly, I used to be a media darling, right? I used to get quoted in the Wall Street Journal. I used to get quoted in Bloomberg, weekly for years, over a decade. But around 2017, that all ended.
Okay.
It's quite interesting. It also happens to be when Trump, started launching the attacks on China. I think they changed the narrative. Matt Pottinger, at the time was the Deputy National Security Advisor, launched the social media attacks on China. But very suddenly, I was banned from being quoted by Bloomberg. Now, to give you background, I started my writing career at Business Week. I used to write a column for them, which became Bloomberg Business Week. I was actually talking with Bloomberg about but appearing on their Bloomberg TV on a weekly basis. And then suddenly I didn't get a call. And so for an entire year, I was wondering what happened. So I asked one of my friends who's a journalist, and they said, Shaun, you've been banned by Bloomberg for being too pro-China. And this was crazy. So I was like, okay. So every couple years, I don't talk to them, and then a journalist calls back and says, Shaun, you're great. We'd like to hear your opinion. So I just had this happen a few months ago, where I got called by a journalist, and she interviewed me about the beverage sector in China. And she
Highly
said,
political.
highly political. And she wants to know, what are the trends in the beverages, pricing, all of that.
Yeah.
And she goes, don't worry. I asked her, am I banned? She was like, no, don't worry. You're not banned. Went to the very end, and she called me up and apologized. And she said that the editor said, sorry, we don't quote Shaun Rein.
Oh, wow.
So Bloomberg has officially, formally banned me. Again, look up on the Bloomberg terminals. You'll see my name, weekly for over 10 years. I find that a lot of the Western media outlets don't want objective reporting on China. They're creating a narrative. You even saw, I don't know if you saw this last week, Tony Blinken and Mitt Romney were giving a speech.
Okay.
And they said that, 10, 15 years ago, you'd wake up in the morning, you'd pick up the physical copy of the Wall Street Journal, New York Times, Washington Post, and they would shape the narrative. Now, they've gotten so much support to ban TikTok because TikTok is helping to change the narrative around what's happening in Gaza. That's what they were talking about. But it's also the same with China. And if you look at it, the American media, I said Wall Street Journal, I said Bloomberg has banned me, but I'm quoted all the time in the Financial Times. So I'm quoted all the time in BBC. So I do believe that there's a concerted effort by the Americans, and I know I sound like I'm a conspiracy theorist, but I believe that the American government did talk to some of these places about not quoting me because they don't want realistic opinions on what's happening. And it really came, Marcel, because I was quite outspoken about what I consider to be terrorism and bigoted attacks on mainland Chinese in Hong Kong. I went there, I saw them firebombing, I saw them destroying businesses that they thought were owned by mainland Chinese. I've been to Xinjiang 3 times. I certainly haven't been to every single place, but I spent a month there over the last 3 years. I traveled to 6 different cities, looked around. I went to cotton fields. I went to factories. Now, could there be forced labor? Could there be genocide? Possibly, but I didn't see any evidence of it. I interviewed hundreds of people. So I think my on-the-ground perspective is questioning the narrative of Bloomberg, of the Wall Street Journal. And frankly, I have better research, better access, more firsthand observations than these media organizations. So I threaten them, and I threaten the objectivity and the truthfulness of the narrative that they present. And that's why they don't like me. But that's why the investors keep bringing me in, because they want to make money. They want to know what's selling, what's not selling.
That's so interesting. And obviously you're doing all of this good work, but do you see any future in which the narrative might change again, and which these things might, open up again, also from the American side? Like we've got the elections coming up, so that'd be kind of my last question to give you maybe a positive, maybe a negative outlook on these matters, because you're here on the ground and it's your daily work and business to exactly tell the truth, I would say.
Hopefully, I don't think in the short term anything that there's going to be warm tensions again,
Yeah.
or warm relations again, excuse me. I think maybe if Gavin Newsom, the governor of California, becomes president, there's a chance because he says he doesn't view China's rise as a zero-sum game with the United States. So he says very rational, pragmatic statements. Now, he's a governor. Will that change when he's running for president? I hope if Donald Trump wins that he'll say, you know what, I won. I beat the Chinese in the trade war. I destroyed them. I got them to buy our American products. And then he eases up on the trade war. You know, one of the things I like him saying is, I don't want I don't want Chinese NEV makers to build in Mexico and export into the US, or build in China and export into the US. I want them to build factories in America and hire American workers. I think that's reasonable. Absolutely. So I think Trump, certainly more than Biden, would be good. I would actually serve in a Trump administration. I'd love to be Secretary of State. That's been a dream job of mine, or I've thought about moving back to the U.S. and running for Senate, you know, maybe against someone like Tom Cotton in Arkansas. But so, you know, you never know. Something positive could happen, but I just don't see that happening in the next year or two, unfortunately. But Trump, if you do win, you know, we've communicated in the past. It's time for you to call me up again.
All right. Lots of rational and straightforward takes. Thanks a lot, Shaun.
Thank you, Marcel, for having me.
Cool.